Hello ladies and gentlemen, welcome back to the channel. Today's video is all about my returns over the last month. 140% triple digit returns. Now let me just repeat that because I know a lot of you be thinking, hang on, did I hear that correctly? You did. 140% low drawdown, 11% drawdown. Don't take my word for it. As I'll show you, 100% independently audited, my FX book, using a reputable, one of the biggest brokers in the world. You're not going to see that anywhere else. So stick around, I've got some amazing analysis for you to show you the cornerstone of how I achieved those results. And more importantly, and how this is relevant to you, is I did that in around half a month. As many of you know that follow me on Instagram, I've been moving home. As you can see with the background, I've got a new setup. So I haven't had time to trade this month. I've been trading around half the month, 10 trading days, and I still managed to produce 140%. Look, many of you work, you have family, you're busy, you don't have time to trade every day, despite what you've been told and what you're encouraged to do, which I've said many times before. Many brokers, educators, they want you to trade every day because they make money when you press the buy and sell button. Well, look, I'm here to tell you that's not the case. You don't need to overtrade. Be selective. That's what this video is all about. So really important that you stick around. Let's get into it. Now, before we get stuck straight into the charts and I show you some amazing analysis, I do want to spend just a few minutes summarizing what to expect in this video. But before I do that, really important, pause this video now. And if you haven't already, go and follow my Instagram at Forex, one of the fastest growing institutional trader channels out on social media with good reason. As many of you know, I'm the only 100% independently audited professional trader on social media. So definitely worth checking me out there. Tons of free education. I'm very active there. Also, as you can see with my setup, background, and as I mentioned in the intro to this video, I've just moved home. So I'm going to try and spend more time putting videos, free education out on YouTube. So subscribe to my YouTube channel. Do that before you forget, and then let's crack on with this video. So as I said at the start, look, 140%, 11% drawdown. But look, as many of you know, I conduct myself with a massive amounts of integrity. I'm a very honest person. And the truth of it is, it'll be easy for me to say, look, if you follow me, if you do the G7 program, if you follow my free educational advice, you can also do the same. And look, that's not the case, okay? The reality is you're not going to be producing the sort of returns I do anytime soon. I've obviously been doing this for 2 decades. However, what you can do is you can start getting on the journey to consistency, and then eventually in the future, if you find early success, you can work your way towards outsized returns. But it's important I say that. First, you need to lay the groundwork. And one of the most important things that I want to highlight in this video, and the reason why I show so many verified stats, is because look, at the end of the day, we need to make sure, right? It's your job to make sure that the advice that you're taking in is credible, okay? So I hear so many people say to me, oh, this person fed me garbage. I wish I hadn't listened to this person. I wish I hadn't listened to that person. That person misled me. But hang on, let's be honest. It's also our job, right? We have to accept responsibility. We have to do due diligence. We have to make sure the person we're listening to is credible. So do that. And that's why I show verified stats. Not to show you what you could be doing tomorrow. Is to show you that what I'm telling you is backed up 100% and independently audited. Let's be honest, it's completely madness. It's flabbergasting, for want of a better word, that people will take advice from anyone these days. And I know there's a lack of credible education out there, and that's why I back everything I do up with real statistics. So that's really important. Now, the second reason it's really important that anything you listen to is backed up, because what I'm about to say is, look, I said it before, you don't need to trade every day. I'm going to show you I only traded 9 or 10 trading days this month, which is about half of the month, and I had my best month this year. Now, how do you know what I'm telling you is true and what someone else telling you is, look, that you can easily trade every day and the setups every day, and you know, we hear it all the time on social media. How do you know that's true and what I'm saying is true? You don't, right? You need verified stats, you need evidence to show that whatever the person's saying is true. So that's why I say what I'm about to tell you, don't take my word for it. It's obviously backed up with the audited results. So that's the theme of the video, right? You don't need to trade every day, and I'm going to show you that. And then finally, we are going to go into, once I've very briefly showed you my stats, we're going to get into some amazing sterling analysis. Now, look, I just want to briefly say my main markets, it's really important you understand this, are S&P 500, the US stock index, and crude oil. As you've seen in my last video, go and check it out. Those are the best markets in the world. I've worked around professional traders all my life, guys that have earned incredible sums of money, and typically they tend to follow those markets, S&P 500, crude oil, some European markets like the Euro Stoxx 50 Bund, and because the Bund, the German 10-year government bond, in case many of you are wondering what that is, and that's because that's where the most observable liquidity is. Again, this is why it's so important you take advice from someone who's been there, done that, and backs it up. Because all this stuff about Forex being a $1 trillion market, it's a big problem, and I'll do another video on it, okay? But it's a more advanced market. So I don't want you to be trading what I'm trading, sterling, straight away. It's a stepping stone, okay? It's a more advanced market. Eventually, you can apply order flow, volume analysis to those markets, but once you've actually hit consistency in some of the more institutionalized markets, like the S&P 500 and crude oil. Look, no one tells you this, okay? This is why it's important, and I keep saying it, and I don't want to sound like a broken record, that you follow someone with credibility, because otherwise you are being led down the garden path. And look, we're in a critical situation, COVID, you know, people's budgets are tight. You've got one shot at this. If you're going to invest in something, invest in the best. Invest in education that has credibility, and that doesn't have to be me, it could be someone else, but just make sure it's backed up. You know, someone who's been in the game a long time and actually proves that they do this for a living. And it's important, you know, and I cannot stress this enough. When I'm saying to start on markets that are institutionalized, who tells you that? No one says it out there, okay? So if you want to really make it in this game, you need to make sure right at the very beginning, you're starting on the right footstep. Otherwise, you're going to be going the wrong way. And, you know, we hear a lot about Forex, and I know I'm going on a little bit, but it's important because I'm about to obviously show you some, you know, Forex analysis, which is counter to what I'm saying. However, I'm doing that for a reason, and that's because it was kind of the cornerstone of what allowed me to get some huge outsized returns this month. And last video I showed you crude oil, so it's kind of nice for me to mix it up a little bit. And obviously I did start on a sterling desk, so those are some of the reasons why I go into FX. But just remember, the point is, broader picture is that, you know, I want people to be starting on more professional markets where there is more institutional participation from a speculative basis. So let's get into the markets. Initially, I'm going to quickly show you my FX book very briefly, and then we'll get into the market. So stick around, and once again, don't forget to follow me on Instagram and subscribe to my channel. Okay traders, so as I said, I'm going to really briefly just show you my stats on the MyFX book. I've already spent 10 minutes doing the intro to the video, and I don't want this video to be more than around 20 minutes, so I'm only going to spend a couple of minutes on this. But look, I do it because credibility is really important to me, as I said, so I just want to show you the actual stats on the MyFX book. And it's funny, when I first started putting out results, you know, at the start of the year, people said to me, oh, it's only 1 month, then only 2 months. And look, at the end of the day, month after month after month, and you can see sort of this month here, 140% is there. You know, it's not only this month. I've been doing it now month after month after month, and eventually I think most people realize now, okay, this guy's doing this for a living. There's consistency there, and that's the most important thing. 1 month is meaningless. I understand that. This is just 1 month's result, but look, obviously I am producing results every single month. That's the first thing to recognize. It's my second triple-digit return this year. But look, that's particular to me. Obviously for you, as long as you have consistency, even if you're doing 1% a month, 5% a month, 10% a month, whatever you're doing, doesn't matter. Consistency is what is important. That's why I wanted to show you this on the outside. Now, if we click into this, So what you can see here, if I just get my pen up, is, look, the main point is, like I said, I don't want to drag this out about the stats because I've done so many videos about the stats before. You can see it for yourself there, 140%. It's not just, I did have this one particular day, which we're going to discuss. But look, at the end of the day, it was fairly consistent throughout the month as well. So I started fairly late, as you know, because I wasn't trading much. In fact, I didn't trade at all, as those who follow me on Instagram know, until the end of the month, towards the end. So I started on the 19th. So you can see here, basically, there were fairly decent gains every single day. And even before I had my big day, I was kind of already up at sort of 45%. So look, yeah, the gains are outsized on this day, but it's still a steady climb throughout. And second most important thing, as I said, is the number of days throughout the month. You can see I'm not trading every day. So important to say this, backed up by what you see here, by a reputable broker, IC Markets, is I didn't trade every day, right? And I keep hearing people saying that, there's setups every day. And what happens is, especially if you go to work, you know what it's like. You get stressed, you think, oh, I can't trade today, I need to rush, I need to do this, I need to execute today. You get sloppy. That's what happens. Don't do that. That's what I want to show you. If you can't trade on a particular day, don't trade. Just leave it. And then final thing I want to say on this before I move away. So look, I'll let you see all the stats here. You can pause the video and have a look at the stats for yourself. They really speak for themselves. I don't need to say much. Is if I can find it, yeah, here we go. You can see, look, I traded one pair, okay? I had a few trades on pound dollar, but the majority, all my gains came from pound yen, okay? I traded one pair, and again, this happens, analysis paralysis, people trading too many pairs. Stick to one asset, master it. I've said it in previous videos. My best month of the year, I traded one pair. I stepped away from pound dollar. There's a reason for that. With the COVID situation going on, uncertainty around whether there's going to be another lockdown. Obviously, now we know that there is going to be a lockdown this week. There's a lot of uncertainty, and I didn't like the way the pound was behaving. So I took a step back. I still looked at the pound as I'm going to show you, and I stuck to pound yen. Okay, so it's all here. Final thing I want to say is something about my MFE, MAE stats, okay? And I've done a separate video on this. So important you understand kind of where your tolerance is. My tolerance has always been around 50 to 60 pips in sterling. I've said this many times on previous videos, and that will become relevant in the analysis I'm about to show you. But I just want to highlight it here. It did get skewed slightly because of my big outperform day, and there's a reason for that, and I'm going to show you that. I won't go into this before. You can have a look at my previous videos on these stats, but these stats are really important. I never hear anyone talking about this on the internet, and it's so crucial. Okay, so that's something you should be mindful of. I'll do some more videos in it on the future, but just remember, you can see here that typically throughout the month, my sort of maximum adverse excursion is around 50 to 60 pips. How much trades will on the odd occasion go against me? I'm quite comfortable with that, and I used that to my advantage on this occasion. So let's have a look at that. Okay, traders, so here we are on the charts finally. I know you've had to listen to me blabber on for around 10-15 minutes, but look, everyone wants to jump on the charts. They don't want to do the preparation beforehand, and a lot of success comes off the charts. So it was important that I said all of that. But look, we are on the charts as promised, and listen really carefully if you can, because you're not going to hear this anywhere else, okay? This is professional analysis, no indicators, using some common sense. I don't want to say that in a patronizing way, because I also realize that a lot of this analysis takes many years to develop, but you've got to start from a logical perspective, right? From the ground up. Get rid of all the stuff on your charts that's just obscuring like the real or the reality of what's going on. And I said this in the last video, trading is no different to any other business. It's just an auction process, just like eBay, Amazon, any business really, where you will have a fair price and the price will be fluctuating around that. You know that as a range. Amazon are watching this every day, okay? They may have data analysts or algorithms watching for this fluctuations, but as long as it's within kind of certain parameters, they're comfortable with it. So similarly, with pound, I was watching the pound yen. Now, all these lines that you see going up are just the days of the month, okay? So the day in question was actually here, the 28th. And if we, let me just quickly bring back the FX book, and you can see here that the big day that I had was the 28th, okay? So I just want to make sure we all agree with that. So we can reference that day, and then let me just actually shut this down now. Shut that down. So there you go. So everything's lined up. So it was actually on this day, the 28th. The market's moving right now, so just ignore that. And look, there's a little bit more to it than this, but in general, and I've said this many times before, and you know, you've seen this yourself, especially those that are learning about market profile on the G7 course, you'll have seen a lot of the times the market is imbalanced. The market was balanced the entire month, which is quite typical of most markets. They will stay balanced for a while where there isn't much going on. Investors are pretty happy to transact with each other at certain prices, and that presents great opportunities at the edges, which we've said before. Look how many opportunities there were at the edges as we kind of just moved to the fringes of fair value and then just mean reverted back, basically. You know, the bread and butter of what investment banks and proprietary trading firms are looking for. Okay, this is where 90% of their profits come from, because they recognize 90% of the time this is what the markets do. Talked about it many times in different videos. But look, sometimes you can be wrong, and that's what happened here. Is I did try in this area to get long on that day, on the 28th, a few days ago, the day I had my big day. So how did I deal with that? You know, normally I might have said, forget it, I'm wrong, it's okay. You know, we've broken out of the range. So if I just highlight the range again, multi-day, in fact, it was many, there's about 20 days, wasn't it? We've broken out here, and sorry, my writing is not the best, but we've broken out here. I've got into some longs expecting to fade the market. Now, obviously, I would have looked at footprint, order flow, the things that you guys know I look at. Real buyers and sellers. Was there buying interest? I probably did see some buying interest at the time. And look, buyers are not always, if they step in, going to win. So obviously on this occasion it failed. Why didn't I just let go of the trade? Well, that's what I want to show you. So one of the things I like to look at is also the pound dollar, right? This is pound yen. This is pound dollar. Okay, so just to show you, look, that's pound yen. I'm flicking over to pound dollar now. Exactly the same period, which was the 28th here. Okay, so you can see it. So again, we were in this range, exactly the same range. Okay, and actually, let's be honest, that's wrong. We actually had a little breakout of the top of the range. So if you, this is why I say follow one pair, okay, one or two pairs maximum. I just kind of knew, okay, we're between 128.50 and sort of 131 throughout the last month. I just know because I've been watching it. And obviously I had a late start to the month, but just by looking at it the past few days, that as you saw, I traded like quite a few days before I had this big day. So it wasn't just this big day that I had in the month. I wouldn't have got so aggressive. I was quite in tune with the pair because I'd been trading it for a few days anyway. I was quite comfortable with this range. So you can see we did break out, but then we came back in. And as I say many times, massive clues. If you fail, but then fail to continue in balance, it's a big clue. The market doesn't want to go higher. So we're back, very much back in the range. Now, do you remember on this day, the 28th, where I got long in pound yen, the market, and in fact, apologize, it wasn't that day, it was there actually, it was in this region. The 28th, the market in pound yen, it actually broke out, didn't it, to the downside here. Okay, so my point is, I was watching pound dollar, and I was kind of watching this range that we were in. Now, what I did is, in my mind, look, this is not something that is an indicator. It's experience, okay? But it's tangible experience. I'm not saying to you it's subconscious and it's something I've just developed. It kind of is to an extent, but it's very tangible in the sense that I can explain it to you. What I was thinking at the time is Number one, I was thinking GU has not broken anywhere near out of this range. In fact, you know, we'd very much pop down towards the lows, which is around 129. We hadn't even bothered. And to be honest, obviously I watch order flow on the pound, and in pound futures, as many of you know who follow me, and again, who have done the program, and you'll see that pound futures is where the volume's at. So if you're watching that, you would have known there wasn't really massive selling interest at this time. So market wasn't getting very aggressive in the pound in general. However, pound yen, it was an anomaly. Something was going on. Clearly, it must have been driven by dollar yen, and I don't want to get into that. Obviously, pound yen is pound dollar and dollar yen, but pound dollar is the majority driver of the pair. So if pound dollar isn't following, clearly there's disparity. Something's not right. So straight away, alarm bells were going off in my head that, hang on, pound yen has no interest in kind of breaking out of this multi-day range. Okay, guys, this isn't 5 minutes. We're talking a whole month. Solid, very solid range, right? So that was number one. Number two, and look, I know this is going to be a bit of a leap for a lot of people because you never have heard of this stat. Don't worry, okay? You've got to start somewhere. I'm going to mention it now. I'm going to do lots of videos about this in the future, and you can read a lot about this on the internet. It's my maximum adverse excursion on the pound yen is about 50 to 60 pips. So I could see on my P&L, I don't really watch P&L, but I could see in terms of my drawdown that I was down around 50 to 60 pips. Okay, so number one, pound was nowhere near going out of the range. It was very comfortable. Okay, and I'm going to show you on the market profile as the last thing why I was even more comfortable. Because fine, I understand on this day it didn't quite get to the edge, so it wasn't necessarily a natural mean reversion play. But I'm going to show you on market profile why it was kind of in the middle of this congestion area where there was a lot of volume, which was an even stronger factor. So when you combine that factor of the pound being incredibly supported by real order flow and kind of its range, and my maximum adverse excursion being right on the edge, I loaded up this thing. I mean, you couldn't give me enough wheelbarrows to carry the amount of position size I took on this thing, right? And that's my point. I was patient. I didn't trade the whole month. I didn't let it stress me out. Okay, I had a decent few days before this. I was in tune with the market, but I'm very relaxed because I know days like this come along. Okay, I got super aggressive on that day, and fine, I had an amazing day that day. But it doesn't matter. Even if you're used to making, 1 or 2%, 1%, 1%, when these opportunities come along, bang, you can ramp it up to get 5%. You don't need to go as super aggressive as me. Obviously, I've been doing this a long time, and there were multiple factors on that day. But this hopefully gives you an idea of the kind of things I was looking for. Now, let me just bring this market profile forward. So, look, don't worry too much if you're not familiar with market profile. It's quite a new concept to most people who are in the retail space. But let me tell you this, it may not be market profile, it may be volume profile, but either of the types of profile that professional investors are looking at. I've never met a consistently profitable professional trader in 20 years who doesn't look at profile. Okay, it may not be market profile, it might be volume profile, and it could be on a depth of market, it could be on the footprint, it could be on a different format. Okay, but they're looking at volume, right? It's obvious. It's business, basic business economics. Whether you're on Amazon, whether you're on eBay, I said it before, these guys want to know how many units are being purchased at price. Price in itself is very important, but on its own is kind of meaningless. So when people say price has to bounce here because it connects up with previous, it's just complete delusion, okay? And I've got the stats to back it up, and that's why I say the stats are so important, so I don't have to keep talking about it. It's just there. The proof's in the pudding. And I'm showing you the aim of this video was to show you how I made outsized return. Okay, this is how I did it. Okay, by applying this logic, not by using indicators or any trend lines, or I don't even know what half of this stuff that I hear talked about here. Look, it's clean, right? You can see it. It's in front of you. It's very clean. As I said to you before, on this particular day, the 28th, and we're almost done, so hang in there, a few more minutes. Okay, the range was down here, but as I said, the bulk of transactions were here, and that's why I was happy. I didn't need it to kind of go all the way to the bottom of the range. I was happy. I knew transactions took place there. I knew there was interest there. The market came into that region. There was nothing for me to do apart from buy this market as it got down here. Look, it's there. I can see the units, okay? Now, if you're a business, and I always use Amazon as an example, but you could be any business, right? In the US, you have Target, you have Costco, you have whoever else you have. They might not be looking at market profile, but they will be looking at the same thing or volume profile in their data. They will have price. It could be TVs, $500. That's where we've sold, 500,000 units. $600, we only sold 50,000 units. $400, we didn't sell any units, but that's probably because they weren't willing to put the price down there. But you see what I mean? That's a profile in itself. It might not look like this, but the basic business approach is exactly the same. Where is the interest? We can see it's here. So as soon as the market got down here, and look, you can see it popped out here, it popped out here. It's exactly the same thing. So I'm looking at this a lot. As soon as it got down here, I knew there was probably going to be a surge of interest to come in because that's where we've transacted before. Okay, I mentioned this in the last video. So hopefully that was useful. Look, I know a lot of this is like, well, I've never seen a lot of this before. It's quite new. Will I get this? Anyone who has kind of spoken to me, seen my free education, or even done the G7 program knows this stuff is kind of potential is there for anyone to do this. If you think about it, when you go into a professional firm, when I started at a bank 17, 18 years ago, I knew nothing about markets, but I was fortunate to be shown, credible things that worked from day one rather than all the stuff I see out there. Look, caveat is just because you use this stuff doesn't necessarily mean that you're going to go out and kill the market. It doesn't, but at least you've got a fighting chance, okay? When you're using all the other stuff I see out there, zero, right? Not even 0.1, 0% chance of succeeding. If you have all this stuff on your chart and you're expecting market to bounce here and there because of some, no disrespect, but almost voodoo magic rubbish, that is what it is, okay? And I don't want to disrespect anyone, but this is why I say stats are important. Because look, I'm open-minded. If someone wants to show me levels that they think are important, back it up with stats. I never see it. You're going down a very deep hole of failure if you're going to listen to people who are showing you all types of things but don't back it up with stats. This is why I like to back it up with stats, because I understand a lot of this does require a kind of leap to kind of think, is there any credibility to this? Well, yeah, that's why I have to back it up with stats, because otherwise this would just be, what is all of this? Just some sort of analysis that I've just made up. I haven't, okay? I've been using this for many, many years. I've seen many professionals become incredibly successful using this type of analysis. And it's not only in financial markets, okay? It's any business in the world that transacts in goods and services. This is what they are doing, okay? Whether you yourself run a business, your parents run a business, a family member runs a business, a friend runs a business, this is what they are doing. They want to know where are transactions taking place and at what price. And that is where I am interested in doing my business, okay? So that's what happened to me. I saw the market was transacting here. We came back in here. Okay, I was trading the pound yen, but I told you about my MAE and we'd gone a bit further down. But that's where I was interested in transacting business. I didn't want to let go of the position. I did the opposite, okay? Complete opposite to most people who would say, oh no, I've got to this level and I have to let go. No, this is a little bit more advanced, but takes time to get there. But hopefully it's given you an insight into how a professional institutional trader thinks. Got tons more videos coming in the future. I'm sorry this one went on a little bit longer than I would have liked. Have a great November. I know that it's locked down for a lot of people in England. So look, keep safe. Thanks a lot for watching the video. Take care and see you on the next one.